When you look at the exchange model moving forward, a lot of concerns here about profitability. How do you make this work in a down market?
Well, look, I think that, the exchange model is something that has become very profitable across traditional exchanges. So we're in the early stages of adoption of crypto, especially in the U.S. We are working through, thoughtful regulation. So my belief is the exchange model will become, extremely profitable over time, but we're going to have bumps in the road until we get there. And today is one of those bumps in the road. But, I'm really, bullish on the exchange model and the industry in general.
I want to talk more about Coinbase for a second here, because the idea that there's a claim on assets here at the end of the day, if there were to be bankruptcy, a lot of firms have not gone public yet, so they don't have similar disclosures. What kind of a risk does that really entail, and what does that make the customer really aware of at the end of the day if things go to zero?
It's really interesting because the SEC came down and said, I think in the prior quarters, they didn't disclose the level of customer assets that they were holding, but the SEC changed disclosures and said, hey, if you're holding customer assets, you now have to put it on your asset and liability side of your balance sheet. So now that disclosure is there, and we see how much assets they really do have. But to your point, a public company like Coinbase, like Voyager, we've been disclosing that since day one, and we've been public 3 years now. I think that's actually a good thing for consumers, because now they see that our assets do cover all the liabilities. We're nowhere near any bankruptcy situation in either case. And you now have more clarity than if you were, investing in a private company and holding your assets with a private company with no required disclosures.
So what about the model itself in terms of making money? There's a lot of questions around there around whether fees really start to go to zero, kind of like you saw in the stock market as spreads started to come in.
Look, I think that, there's a place in this business for commissions. Consumers are getting a great price. Great, action on all their trades. But I do think that, there's no national best bid and offer. This is where the market actually changes and is different for crypto versus the traditional markets. The traditional markets have Reg NMS, a national best bidder offer, so you have, price protection on every trade. In the crypto market, you don't. And that's why I think we're looking for thoughtful regulation. But as long as there's exchanges around the globe holding and trading all these cryptos, there's opportunities for commissions and for spreads for everybody in the industry.
Now, I want to talk more about price protection, as you say. Let's talk about it as it pertains to UST. Now trading at about 70 cents on the dollar. You made a decision not to list UST, but you did list Luna. Why is that?
Yeah, so when we looked at the underlying of UST, we saw it truly wasn't a stable coin in the same instance as USDC. Now, USDC, the US dollar stable coin by Circle and Coinbase, is backed by US dollars and US treasuries. So, and it has an attestation from a prominent accounting firm in Grant Thornton. We felt very comfortable, and we still do, that there always will be a dollar for dollar there. When we looked at UST, we didn't see the same assets behind it, and so we were uncomfortable in bringing that to our customers. But we did list Luna only from an aspect of price action, that consumers can actually participate and trade Luna, but not take it off the platform, because one of the main reasons to take it off the platform was to stake it for UST and earn those rewards. We didn't feel comfortable, always thinking about the customer first and how they were going to look at the trade and the asset. We chose not to list UST and to list Luna.
Do you think more exchanges are going to be more discerning moving forward about the types of assets that they do list, especially when it comes to DeFi?
I definitely think that, exchanges, everybody's going to take a different look about how they list their coins. We go through a really detailed process, and I think everybody's starting and going to expand their processes for that as well. I do think we saw a flight out of DeFi today. We saw a lot of consumers bringing their assets back to a centralized, place like us, so they can actually be comfortable in holding the assets. Because in the DeFi world, you're putting your assets into some contract and going to get some reward on it. But now we see that those rewards may not be as good as they look. And to trust another party to do a lot of the work and diligence for you, we saw massive inflows today and massive trading volume today.
So what then is the ultimate ramification for DeFi into this year, given that it's not just UST that is falling? You see Bitcoin falling as well below that 30,000 mark that everyone was watching.
Look, I think that this is an opportunity for a reset opportunity. I think, UST did have an impact on the entire market today, because UST was backed by Bitcoin, and there was a lot of selling of Bitcoin related to the UST. So I think you're seeing a reset time. I think we're close to the bottom here, if we're not there already, and we'll see that rebound. But it's truly an opportunity for people to learn more, and that's the key thing here. Individuals, consumers, brokers like us, we need to educate people more. We need to educate consumers why these cryptocurrencies matter, and therefore then they could make an educated decision on which ones to own.